My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. What really happens if there's no stimulus? I've heard numerous politicians argue the economy's strong enough. We don't need no stinking stimulus. Others have flat out told me I only want a stimulus package to save the stock market. Well, that's ridiculous. Today, we got an early glimpse of what happens if there's no bailout, no grants for struggling businesses. They can't benefit from low interest rates. And as far as the stock market is concerned, it's not that big a deal. Dow ultimately gained 52 points. S&P inched up 0.30%. NASDAQ advanced 0.37%. Full disclosure, I don't want a stimulus package to save the stock market. I want a stimulus package to save an industry I know all too well, the hospitality industry, which I can tell you from my ownership stakes in an inn and 2 restaurants is getting destroyed by the pandemic. Millions of jobs are on the line, but they reside in small businesses, ones that don't show up in the averages. But individual stocks sure do. And the winners on a day like today tell you everything you need to know about the losers in the broader economy, especially the biggest winner, which is the one I want to focus on. The winner is the stock of Darden, the owner of Olive Garden and Longhorn Steakhouse, along with some others, with a stock that surged 8% on a better-than-expected quarter, strongest stock in the S&P 500. Yes, I am telling you right now that the strength in the stock of Darden, it should terrify you. Darden's winning because its private competitors can't cope with the COVID-19 economy. We're headed for a world where if you want to go out for dinner, you won't have many options other than some big chains with deep pockets. Olive Garden will be the height of fine dining. Why? Because Darden's big enough with a strong enough balance sheet that it can do just fine, even in the age of social distancing. We learned today that they can shut down half their tables and still make money. So much money that they actually reinstated their dividend and also repaid a $270 million term loan that would strangle most smaller enterprises. These guys are on pace to be able to do almost exactly as well as they did before the pandemic. When I went through this morning's conference call, which was a wondrous thing, I was struck by all the things that separate Darden from its small to medium-sized competitors that are hanging on by their fingernails. So let me tick down all the reasons why you better learn to love the giant chicken parmigiana, limited time only, or the Tour of Italy, the fettuccine alfredo, or the giant cheese stuffed shells, all under $20, because without another stimulus bill, you're not going to get a lot of other options. It's infinite breadsticks all the way down, and that unbelievable salad. First difference. Nearly every independent restaurant I know would immediately fold if they were told they could only have 25% of their tables open with no outdoor space. It's just not viable. If you don't have the technology or the power to control the delivery services into giving you a good deal, or the parking spaces to handle takeout at scale, your goose scampi is cooked. Almost no private restaurants can cut costs enough to turn a profit under social distancing, and raising prices in this economy is simply out of the question. Plus, there's this aesthetic angle that I hadn't thought of until I read through this. If you're running at half capacity or less, you need to configure the tables in a nice way, with barriers that don't make people feel like they're eating in a plexiglass-walled bank, and that's expensive. When you look through Darden's excellent slide desk, you see beautiful booths with partitions. Believe me, independent restaurants can't afford to build or buy new furniture right now. But Darden was able to borrow a big slug of cash, fix up its stores to be safer and look better, and then make a bunch of money to repay the debt. Second, Olive Garden pivoted perfectly from indoor dining to takeout. How? They instituted order online, pay online, car-side pickup, aided by its bountiful parking lots and a great app. Now, that is a substantial investment, though, but Darden has the scale to do it. We often hear that term scale, but we don't spend enough time unpacking what it means. When you've got scale, people, you can afford to hire great web designers, buy new hardware for all your stores, new space dividers between each one. There's a lot that goes into making and installing those systems, though. And even if you've got the money, most restaurateurs didn't get in the business to design better point-of-sale systems. They did it because they like to make good food. Throughout the conference call, Darden's executives kept coming back to their technological prowess, which is bountiful. Olive Garden's not going to be the next Microsoft, but they have the resources to turn on a dime. Scale means that if Darden needs to be a tech company for a little bit, it can be a tech company for a little bit. Small operators will never have that luxury. Olive Garden had a protocol for 25% of tables open and a protocol for 50% of tables open. Meanwhile, independent restaurants should just be trying to figure out what works. Then, after the seats were ripped out, Olive Garden was able to gauge how many customers came to the restaurants and couldn't get in, and so ordered takeout instead. And across the entire chain, that happened. Again, not something smaller players can duplicate. They can't even guess how much food they need on hand. They end up having to throw a huge amount of it away because they didn't guess how many would come that night. Third big difference, Darden's ready right now for the downfall of its competitors. Management acknowledged that most urban restaurants are in real trouble, and Darden's prepared to pounce when they start closing. Before COVID, the company said it couldn't really justify building new restaurants in Manhattan because it was just too expensive. Now, though, they said they see terrific opportunities in both Manhattan and other major urban areas. Here it comes. Think about that. A lot of great real estate's about to open up as your favorite local bars and restaurants go under. Now, I actually love Olive Garden. I like to go there with my daughter. She's a vegetarian. It's a great place to eat. But I don't want to live in a future where it's just Olive Garden for as far as the eye can see. What could reverse the trend? Well, it's pretty simple. We need a deal in Washington. I know Treasury Secretary Mnuchin has repeatedly pleaded for more help from Congress to prop up the restaurant and hospitality industries because he actually knows what's going on in this country. He did it again today.
As it relates to the restaurant and broader hospitality industries, we think those industries don't need more debt. What they need is economic relief because they're shut down as a result of COVID.
Amen. But for that to happen, the Democrats in the House and the Republicans in the Senate need to cooperate with each other for less than 6 weeks before an election. Now, I'm not going to hold my breath. This rally in Darden today says there is no compromise to be had. Again, though, you wouldn't know it by looking at the overall averages because the stock market's mostly insulated from the worst parts of the COVID economy. Unfortunately, without some help from Congress, you better believe most independent restaurants will not be able to hold out. I know mine can't. Sadly, they can't. Bad news for the economy, for this wholesale decline of all restaurants, but great news for publicly traded companies with scale to thrive in this environment. That's why I think Darden stock is still a buy, even after today's run. That's the takeaway of this piece. How do you put a price-earnings multiple in the only chain other than maybe Brinker, parent of Chili's, that has staying power in an industry that's been uniquely destroyed by COVID, the sit-down restaurant industry? All I know is the stock deserves to go higher, and the longer the pandemic goes on, the more attractive it gets. Look, sit-down restaurants are always going to be superfluous. That's the issue. You can cook your own food. I like that General Mills stock yesterday, or McCormick. You can get takeout. You can get delivery. They certainly don't impact the stock market, but they absolutely impact your day-to-day life, and if all these smaller operators go under at the same time, they'll impact the broader economy, too. The bottom line, in a world where you can get Olive Garden's 5-cheese ziti Alfarno, not the Alfredo, but the Alfarno, delivered right to your car for $16.99. How's the little guy supposed to compete? Without a second bailout from Washington for this industry, we're headed for a world with just a couple of big restaurant chains and very few individual proprietors. You want variety? Take it up with Congress.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.